Credit Suisse issued a report which was much more bullish on the China market, upping forecasts for GDP growth and expecting higher PMIs. Tell me the difference in currents here.
Well, I mean, we have, I guess, above consensus GDP forecast at 5.9%, but the forecast is dependent on fiscal stimulus measures that to be announced. But at the moment, what investors have went through in the last 10 months is whenever there was a dip, they try to buy on dip. And now we had 11 dips that failed to sustain a rally and market continued to fall. What market needs to see is a confirmation that the stimulus measures will be coming through in March onwards. And until then, investors are staying put. So therefore, in the near term, until we see those confirmations that they are coming through, investors are not allocating in any sizable measures in the China equities right here, right now. But when they do come through, as our economists expect in March and into the coming months, and that stimulus measures are rolled out, earnings measures or outlook will be improved, regulatory environment stabilizes, then investors get the confidence that this is not another buy on dip that will fail. And therefore, the economic picture, in our view, is more supportive, driven by stimulus measures that's coming. But the market, they're not going through a speculative anticipation that it's coming. They need to see it's coming. Until then, they will hold back.
But that 5.9% figure that you've mentioned is not just above consensus. It's quite a long way above consensus. And there are some, Goldman Sachs this morning, saying they've shaved their growth to 4.2%, 4.3%. So there's a big difference in opinion in the markets here. What accounts for such a wide variation?
Well, I mean, it really depends on your assumption. I mean, last year, we held on to our 8.2% GDP target throughout the year. And whilst many banks have actually been changing the outlook on a very consistent basis, what we're looking for here this year is the stimulus measure will be coming through in some good scale. So far, what we've seen so far is a net increase of fiscal stimulus, about 1% impact as a percentage of GDP. What's likely to come is we think in the two session, they will announce a GDP target above 5%. And then they will look forward to beating that GDP target throughout the year. And we have already heard from some 13 to 15 provinces, including Beijing, that they have announced some GDP target around average of 5.5%. So we think that authorities tend to set a target that's below what they can achieve and then try to outperform that. So we do have a slightly more optimistic GDP target than what the average street anticipates. And we hope that we are right, but with the stake at hand being quite huge and the housing market being uncertain, I see that economists do have a diverging assumption on the housing market development. So therefore, I think, we are slightly different to the market, but we hold on to this confidence that they will deliver.